Okay, let's talk about gifting in India, specifically for NRIs. Understanding the tax side of things is really crucial, whether you're the one giving or the one getting the gift. This deep dive is, well, just for you, trying to cut through some of that complexity around Indian tax rules when NRIs are involved. And look, for advice tailored exactly to your situation, you can always reach out to Tax Exceller. They've also got an AI chatbot on their website you might want to check out. If you find this helpful, please do hit that like button and subscribe. So, the big question: gifting money, gifting property. Does it create tax issues for NRIs back in India? What's the deal?
It's a super common question, yeah.
Hmm.
And the details really, really matter. It's definitely not a simple yes or no. Who's giving, who's receiving. That changes the whole picture.
Right. Okay, let's start with the NRI doing the gifting. Say an NRI wants to send money or gift a flat to someone in India. Does the NRI, the donor, pay tax in India on that?
This often surprises people, but uh, generally, no. There are usually no tax implications in India for the NRI donor just for giving the gift, assuming nothing's received in return. The potential tax hit, if there is one, falls on the person receiving it.
Ah, okay. So the giver, the NRI, is usually off the hook tax-wise in India. Good
Yeah,
to know. But the receiver might not be. And this is where, well, this is where the relationship comes in, isn't it? That's the key.
precisely. That is the absolute core distinction in Indian gift tax law. The Income Tax Act has a specific definition of relative. If an NRI gifts something to someone who fits that definition, spouse, parents, kids, siblings, grandparents, grandchildren, and a few others, then good news. Zero tax liability for the recipient in India. Doesn't matter how big the gift is.
Wow. Okay. So within that family circle, as defined by the tax law, it's tax-free for the receiver. That's huge.
Yeah.
But what if the NRI gifts to someone outside that definition, maybe a close friend or a cousin who doesn't technically count as a relative under the rules?
Right, that's where it gets tricky. If the gift goes to a non-relative, then yes, it can be taxable income for the person receiving it. The rule kicks in if the total value of gifts that person gets from all non-relative donors adds up to more than 50,000 rupees in one financial year.
50,000 rupees. INR 50,000. Total. From everyone who isn't a relative in a whole year. That feels kind of low, doesn't it?
It is a relatively low threshold, yes.
Mhm.
And if you go over that 50,000, then the entire gift amount, not just the amount over 50K, but the whole thing becomes taxable income for the recipient. It gets taxed under the heading income from other sources, basically at whatever their normal income tax rate is, applies to cash, movable property value, and movable property stamp value.
Whoa. So hang on. If an NRI friend sends, say, 60,000 rupees, the entire 60,000 is suddenly income for the recipient in India. That's a major heads up. Now, you also mentioned something called clubbing. What's that about? Is that related?
Ah, yes. Clubbing. This is another layer. Sort of loops back to the donor, the NRI, in certain cases. If an NRI gifts an asset that produces income, think rental property, dividend-paying stocks, bonds to specific relatives like their spouse or minor child, then the income that asset generates after the gift might be clubbed or added back to the NRI donor's income and taxed in their hands in India.
So, wait. The gift itself wasn't taxed when given, but the rent or dividends later could be taxed back to the NRI giver. Feels a bit like the tax man saying, nice try.
You can see it that way. It's basically designed to stop people from just shifting income-generating assets to, say, a spouse in a lower tax bracket to avoid tax. And, just a practical point, whenever immovable property changes hands as a gift, documentation is absolutely vital.
Yeah.
Registered gift deed, paying the stamp duty, that's non-negotiable legally.
Right? Documentation, always crucial. Okay, so that covers the NRI giving a gift. Let's flip it. What if an NRI is receiving a gift? Someone in India gives them money or property. Is that taxable for the NRI recipient in India?
Well, the same basic rules apply, just roles reversed. Gifts received by an NRI from someone in India, they are taxable in India if they're over that 50,000 rupee threshold in a year,
Yeah.
and if they come from non-relatives.
Okay, so the same 50K non-relative rule applies when NRIs are on the receiving end too. But are there exceptions? Situations where an NRI can receive a gift over 50K from a non-relative and it's not taxed?
Yes, absolutely. There are specific exemptions built into the law.
Hmm.
The big ones for NRIs receiving gifts are gifts received for their wedding, gifts through inheritance, or gifts under a will. These are generally exempt, doesn't matter the amount, or if it's from a non-relative.
Okay, so wedding gifts, inheritance, wills, those are safe. And I'm guessing that relative definition is still super important here too.
It is. Works both ways. If an NRI gets a gift from someone who is considered a relative under the tax rules, that gift is completely exempt for the NRI. No tax. Period.
Really highlights how important knowing that specific definition of relative is.
Okay, so we've got income tax covered.
Hmm.
Are there other regulatory hurdles, other things NRIs need to think about with gifts?
Definitely. Big one is FEMA, the Foreign Exchange Management Act. This is totally separate from income tax rules, but just as important.
FEMA. How does that apply to gifts?
Well, FEMA rules govern how non-residents can hold and transfer assets in India. So it depends on the asset being gifted. Immovable property is a key one. You have to follow the FEMA rules for acquiring or gifting property. And remember, there's a major restriction. NRIs generally cannot hold agricultural land, plantations, or farmhouses. So gifting or receiving those, that's usually a no-go or needs special permission. Other things like equity shares also have specific FEMA rules. Mutual funds, ETFs, jewelry might need a closer look depending on the specifics. So wrapping up the main takeaway, that relative definition and the 50,000 rupee limit for non-relatives are central to gift tax for NRIs giving or receiving. But then you've got clubbing, you've got FEMA, maybe even DTAAs, double taxation avoidance agreements could play a role, though that's case by case. Documentation and professional advice are just essential.
It really shows how layers of regulation kick in when you're dealing with finances across borders.
Yeah, it makes you think, doesn't it? With all those nuances, different assets, FEMA, maybe a tax treaty, could a gift that seems totally straightforward on the surface actually end up being surprisingly complex?
It absolutely could, which
Yeah.
again underscores the need for careful planning or getting that expert guidance.
Really insightful stuff, thank you. And remember, everyone, for that tailored advice, you can connect with Tax Exceller or check out their AI chatbot on the website. If this deep dive gave you some clarity, please give us a like and subscribe for more.